could it be the Summer Olympics that are driving the action you see on your screen here? Well, Bespoke Investment Group crunched some numbers. They went to the past calendars. Guess what, folks? The Dow has averaged a gain of 4% from the opening ceremony to the closing ceremony over 26 Summer Olympics. That's since 1900. Take a look at the LA Summer Olympics, 1984, a huge, nearly 10% of a jump there for the Dow Jones Industrials. I went to a bunch of those events. I was in LA working at Camp Beverly Hills. Yes, there is such a thing. I was folding sweatshirts. What do you want? But guess what? Maybe that had something to do with it. I don't know. But look at Sydney. That, in the year 2000, saw a contraction of 2.5%. As you remember, we had seen, or we were about to see, or in the process of seeing the implosion of the dot-com bubble. But overall, it's a 4% gain over all the Summer Olympics. And since the Rio Games kicked off, the blue chip index is up about 0.5%. Let's bring in our traders. They're our biggest athletes here at the New York Stock Exchange, CME Group and the NYMEX. Scott Redler, the Olympics notwithstanding, what else is driving what's going on with the markets here? We're building upon last week's records, last Thursday, and then before that, we got a very good July jobs number. So absent any major negatives, we continue to move higher, but for how long?
Well, like they say, the trend is your friend, and I feel like for the last 3 months, all we've been doing is fighting the headlines. Sell in May and go away. Oil went down, you know, in bear market territory, 50 to 40. Should we get out of stocks? Will earnings derail the market? Well, you know what? Earnings have been pretty good. Oil bounced. You had a good jobs number, and you have a positive trend. Put that all together, and you stay invested in the stock market. So if they want to say the Olympics is the reason why we're up, let it be that. Do I think we get above 2,200 and a little bit further? I do.
Okay, right now we're at 2191, so we're just 9 points away from that. Larry Levin, I love your opinions because, you know, you're a guy who actually teaches people how to capitalize no matter what the market is doing. So what is your best advice, whether it's puts or calls or just basic investment for the retail investor watching right this second?
Well, I guess, Liz, I'd start with don't use the Summer Olympics as the way to help you make your trading decisions.
Okay,
That's
so
the very first thing you want to do. Yeah, but yes, I agree with Scott that this market will keep going higher. What do you want to do? You really need to be long this market. It's a little bit difficult to do because there are no pullbacks, right? We teach people to buy pullbacks, but you really had to buy the highs to be successful in this market. And I'm not a real big fan of that, but really that's the only way you can be in this market. Now, with that being said, I think you need to have close stops or tight stops in there so you protect yourself. But I do think this market will keep going higher. It'll keep going higher on really interest rates that aren't going to move anytime soon. And until that changes, this market will keep going up, and I think you can keep buying the highs. Yeah,
I just checked. The odds of a December rate hike are the highest for the rest of the year, and they're only at 38%. But, Luke, you could argue that energy names and energy stocks are propelling this market. ExxonMobil, Chevron, of course, on the Dow side, but all the other integrated oils are doing pretty decently today. We could show some of them. And right now we're at 5-week highs for oil. 3 days in a row that we've seen decent moves that equal about a 10% plus move. What is actually driving this beyond, I don't know, hopes of an output freeze by OPEC and Russia open to a joint cap on production if necessary?
Well, that's part of it. There's news that there's going to be an OPEC meeting in about 2 weeks in Algeria, and Saudi Arabia is talking about holding back production a little bit. But oil's had a magnet at 45. You know, over the last 9 months we've been talking, we keep saying it's going to stay in this range, and it has, right? Or above 40, below 50, and that's where it is. And as long as there's free money around, I think the stock market is going to climb higher a little bit. And if earnings continue to be good and production is going to pick up, although I haven't seen it that much, I think oil will still stick around here. But the election and the dollar are going to be really important to oil for the second half of the year.
That is, I think that's a very good assessment, and I also think that you might start to see a bit of a crush when people want to refi or quickly sign in a mortgage because they perceive that maybe interest rates will be going higher. Scott, Larry, Luke, great to see all of you on this steamy, hot August afternoon. Thank you so much.